Well, Elizabeth, Stephen, thanks for joining us. It's good to be in New York. We're in New York, so let's start off with talking about foreign demand for your issuance right now. We're seeing non-Canadian trading of provincial debt rising steadily since 2023. Let's talk generally about why that is, and in current months, maybe talk about whether the outflows potentially from U.S. Treasuries is having a little impact on.
Okay, I guess
Please, ladies first.
I'll get things started. In terms of borrowing non-Canadian interest in the Canadian sector of issuers, we do have something we're colloquially calling Canada Inc. Not something we coined, something that has sort of emerged as we've gone through since 2023 with international interest in Canadian credits, specifically the Canadian provinces and PSC credits. You just had one sitting here just before us. And our presence in those international markets, our reach into them, is somewhat buoyed by all of us participating. So for each one of us that goes into a market outside of the Canadian dollar, what we're finding is it kind of paves the way for the next and the next. And a lot of receptivity. I think foundational to that receptivity is the fact that Canada on the world stage is having a bit of a moment in that we are a politically and economically stable space in a world that has many sort of unsettled regions or just periods where things seem to be, I guess, somewhat volatile and hard to get a read on. So I think that backdrop has been really constructive. And when you look at something like what I'm calling Canada Inc. here, you're looking at a variety of credits that are all extremely credit worthy, but still give you a little bit of room to play up and down the credit curve, and also give you slightly different personalities for each of us, which I think over the course of the last day and a half, we've been meeting with investors, as have many of the Canadian provinces and pension funds here. And we've all been telling our unique stories, but underlying that is a common thread that binds us all. And we are really having, like I said, that Canadian moment on the world stage. And I think we're all supporting each other as we go out into that world and try and raise funds for our different programs. And that's really kind of resonating with investors in the here and now.
Yeah, no, I would agree. I think the personalities comment might have been directed at me, but that's okay. As Canada, as issuers, Canadian provinces are really quite unique on the world stage. We have far more autonomy than you see in sub-sovereign issuers generally. But we also have great liquidity. The Canadian domestic market is the foundation of what we've sort of taken to the world. And we've all been quite regimented. We've all been quite programmatic, systematic about how we approach the Canadian market. And we've ensured that the Canadian investor base is well informed, is able to trade in and out of our bonds. As Elizabeth says, has a menu of options. You have Ontario, which is sort of the base of the Canadian provincial issuance market, and then you can trade in and out of more wild credits like Alberta. You can get a little more spread, a little more volatility. But as we take that into the world stage, it's interesting that we see, our first entry is always sort of in foreign currency. Meeting foreign demand, but then maintaining that same level of liquidity, that same level of interaction with the investors. And as Elizabeth said, like the development of Canada Inc., which involves, frankly, the pension funds spending a lot of money, which as provinces we don't or can't, in the same way in terms of marketing, in terms of global presence, in terms of also partnering on investment, not just on issuance. We've actually banded together, we're Canadian, we're not Albertan or Ontarian. We all work together.
So we talked about some of the similarities that you guys work together on. Let's talk about some of the differences, and in particularly some of the headwinds that may be coming up or are currently here for your different economies. I'll start with you, Elizabeth. Ontario, dynamic, diverse economy, but also quite trade sensitive, and there's sectoral tariffs that are on some of the products, main exports of Ontario, and the outlook for growth is is around 1% to 1.5, I think, over the horizon. Tell me about some of the challenges, or maybe some of what you're hearing from investors regarding some of the headwinds facing the Ontario economy.
I would say that in terms of the feedback we're getting from investors at this point in time, we're Canadian investors especially, but now more as we are more prevalent in foreign markets, it's coming through there too. There's a little bit of differentiation where there's time being spent understanding each province rather than grouping it as like all of us being very similar. So one of the messages that we're strongly delivering here is that we do have a diversified economy, that more than 3/4 of our economy is based on services. Only 23% is goods. So when we talk about trade impacts, we're scaling from there, and then 10% is actually manufacturing. So yes, we're concerned about the impacts of what is happening in the trade space and the uncertainty and unsettledness of that space right here, right now. But there are other things going on in the Ontario economy because of its diverse nature that somewhat help buffer, et cetera, what is going on there. I would say that unsettled nature of what is happening in that space does have implications in terms of individuals delaying decisions on terms of their sort of spending and consumer behavior, but also businesses, their spending and investment in their business. And so that delaying of decision making, we're seeing that come through in the numbers that we're expecting to see for 2025 and into 2026, after which we should have a clearer picture of what we're facing. We're a big and diverse province, and so what we are seeing in the shorter term is that there has been signs of resilience and adaptation to this sort of uncertain backdrop where adjustments are being made. We do have 77% of our exports going to the US, so that is an exposure. But we also have 52% of our imports coming from the US. So there's a little bit of a natural hedge in that relationship. I'm not going to pretend that it's equal and offsetting, but so there's discussions to be had, and obviously as those evolve, Ontario's economy will evolve with it.
Steve, maybe you want to pick this up. On the Alberta side of things, in the Alberta economy, there's always been some sort of exemption that existed for energy products, and that's given you some sort of immunization from what's going on for now, at least at this point. Maybe talk about some of the headwinds that you see and how it's affected issuance for you in the last little while.
No, for sure, and we're sort of the polar opposite of Ontario. Alberta is a concentrated economy. It's concentrated in the energy sector. It's not that the other sectors of the economy don't exist. We have a large agricultural sector, we have tourism, we have trade, we have manufacturing, but none of it can compete with the scale and the scope of energy. A full 20% directly is mining and oil extraction, but I would say a full third of the economy is heavily linked to the energy sector. So that makes us a very volatile, it makes our revenue stream very volatile for one, but also makes our economic fortunes very volatile, heavily linked to the United States, obviously. I haven't updated the number recently, but it's somewhere around 95% of our energy exports go to the US. And so when we budgeted for the coming fiscal year in February, we were sort of peak tariff rhetoric. We weren't sure what to expect. We were told 25%. It turns out all of the energy exports that we're really concerned about are USMCA compliant or needed some paperwork filed. So we haven't seen any drop in demand for our product, and any increase in price that resulted from tariffs, which have not been really placed on the energy exports, would have been borne by the U.S. consumer, the U.S. refiner. So our fortunes are more tied to the trade in global energy. So there's a far larger impact on provincial revenues from WTI. So West Texas Intermediate is one of the inputs into our royalty regime. It's what the tax system is based on when we tax oil coming out of the ground. And so a $1 change in WTI over the course of the year amounts to a $750 billion change in the Alberta revenue picture. And that's like the full 1% of the budget, and that's just $1. And we've seen massive swings.
Right.
So from our perspective, it's a matter of, when we're talking about funding, just being far enough ahead of things that we don't have to fund as needed. But at the moment, we're very cash rich, so we're always well ahead of the program. But it's a matter of explaining to investors that volatility isn't necessarily weakness. I mean, it can lead to periods where we're running massive surpluses. So for the past 5 years, the provincial budget's been in a surplus position. And this is a very fiscally conservative government that's in power at the moment. So they've actually used it for debt repayment. You know, we're the first province in Canada in decades to actually be paying down debt. And then we're also investing into the Heritage Fund, which is our sovereign wealth fund. So the uses of our cash are a little different depending on where our fiscal situation is. So we're in deficit right now. That means that we'll be borrowing more. But our balance sheet looks very strong at the moment, very much different than the other provinces for sure.
Right. And so in terms of issuance right now, you're around, you're expecting over 50 and you're on?
We're like 12 and a half.
You're 12 and a half, right?
We're not expecting over 50, no.
No?
Oh dear.
Our current number is $42.8 billion
Okay,
for
great.
this current fiscal year. And then if there's an opportunity, we may or may not do some further borrowing. Last year, we finished our borrowing program in first week of January. And so had almost 3 months of additional time to do borrowing, what we would call pre-borrowing, pre-funding, whatever term you like to use for that. And I anticipate that we're just about, well, we've just finished the halfway mark of our fiscal year, and we're 74% funded on that $42.8 billion. So anticipate that we may look at a similar scenario where we're completed our set borrowing program in early January and have the following sort of 2.5 or so months to do other borrowing if we choose and if the market is receptive.
Okay, great. So let's talk. We're going quick, which is so it always goes quick.
Time flies.
But let's talk more about some of the other trends we're seeing here. So in sovereign nations, there's a lot more debt being issued in general, and maybe talk about also what's going on in terms of the steepening we're seeing in the curve, how that affects your respective strategies.
If I may.
You go first.
Sure. We're relatively agnostic on the curve. And look, we're a constant funder in the markets. You know, you look at our maturity profile, we've always got a stack of a few billion ahead of us. So if we start to pick and choose our points on the curves when it comes to issuance, it's gamesmanship that doesn't really amount to long-term cost savings for us. We're always going to be funding ourselves in the market. And in Canada, you know, for provinces, the 30-year part of the curve is quite liquid, and it's very attractive to us because it moves a lot of things out of the way, you know, particularly in periods of heavy financing. So when it comes to curve steepening, we're not traders, we're issuers. I don't think we play many games ahead of that. You know, hedging might buy you a few months worth of savings, but in the long run, it all just comes back to what are your debt servicing costs. And the debt service bite in Alberta is quite low. So I would happily pay up a little to go up the curve and throw a few $1 billion out of the way for a few years.
Great. And for you, Elizabeth?
When you look at our program, I just mentioned $42.8 billion, and you look at a 52-week year, and then you take out the times where you're blacked out because there's an economic release coming, potentially a ratings event, holidays over the sort of the turn of the calendar year. You're really looking at a province that is on pace to issue roughly $1 billion a week, every week you can. So when we talk about being constantly in the market, I would say that we are sort of the poster child for that. And so we're averaging in across the year. And so we're not, to Steve's point, picking moments in that sort of very precise way or trying to, I guess, beat the market. We do have mechanisms in-house with our debt management team that allow us to manage different aspects of our issuance and the overall yield of that issuance. And that's how I would say we manifest sort of a strategy in terms of terms and timing. But when you think about it, investors are very interested in your credit when yields are high and spreads are wide, which tends to be the exact opposite of when you would most like to issue your debt. So you do have to have some mechanisms in place to help you bridge between those two perspectives and get that issue into the market at a level that when it is fully baked on your end, you're also happy with. So I think you probably have some similar strategies as well, but really it's an averaging through the year and then some management in the back.
For us, you are the market, so we just play off you.
We're a bit of a benchmark, yes.
Yeah.
That once a week thing sort of gives you that halo effect, yes.
So let's. I just want to touch on this before we finish up, but I just want to get your thoughts on generally what's going on with the federal situation and the amount of debt that's being projected there. Speaking with Stéphane this morning, he sees a $100 billion deficit. It's quite large, but a lot of these outlays are intended for fast-tracking large major projects, some of which are in your provinces, are starting to be on the list. Maybe just talk, if you could, just on how that impacts your provinces in general, and whether you see some opportunities there moving forward.
I mean, for us, it's largely an exogenous, impact. Yes, $100 billion is a large deficit. Yes, the federal government is on a very different fiscal track than we are in Alberta, and they have a very different fiscal mindset. But that's a sovereign national government with an agenda. We would like to see more of those capital projects in Alberta, I'll tell you that. But if they're in the national interest, we're supportive of them. And Canada has a long way to go before running deficits the size that they're talking about is going to create an issue fiscally long term. And do they get downgraded if they run these for the next few years? Probably. But we used to be AAA, and we're not anymore. Changed after I joined. I don't think they were related. So what, right? It's kind of my point. Canada has tremendous fiscal capacity. There's maybe 9 AAAs in the world. They're not any better off than we are. And I think smartly spending the money on capital projects that genuinely change the structure of the country is money well spent.
And to just add to that point, one of the discussion pieces is, so the projects in Alberta, let's say, as an example, and it's a pipeline, where's the steel for that pipeline coming from? Well, maybe from an Ontario steel plant. So I think we also have to be careful not to pigeonhole these projects as being specific to to one province, because one of the things that's obviously under discussion is interprovincial trade barriers and making sure that we are working as a country, coast to coast rather than north-south, more of an east-west perspective on some of these things, and hopefully that's what percolates through as these new programs come underway.
Great. So we've got 50 seconds left. I'm not sure I can get any more questions into you folks, but thanks very much for joining us. It's been a pleasure.
Thanks very much,
Thank
Erik.
you, and thank
to
you
Bloomberg
to Bloomberg and to any investors that are buying our bonds. We're delighted you're doing that, and we encourage you to keep doing that. Thank you so much.
Thanks, everybody.